Happy Sunday, everyone. We're going to review the Robinhood portfolio today. And for right now, the portfolio is sitting at $65,000. Let's take a look at the week stats. The week stats, it shows that I'm up 1%. Let's take a look at the year stats. I think that's what's pretty much what people are looking forward to seeing. Right now, the portfolio is sitting at 23%. And the all-time shows that I am up 25%. So those are the stats, guys, and we're going to talk about the positions in the portfolio. And just one quick note that I wanted to talk about is I did allow the use of Robinhood Gold. So now I am a Robinhood Gold member, but I did not elect to use the margin on Robinhood Gold. And the reason why I didn't do that is because I'm not an investor that believes in using money that I don't have. I want to use my own money. So I know a lot of investors, a lot of traders, they like using margin, and sometimes they get margin calls, sometimes they don't. But just for the sake of my argument, I'm just saying, looking at it from my perspective, I don't like using margin because I don't like using money that does not belong to me. I like using my own money. So we're going to look at the positions in the portfolio, and there have been, I think, about five new positions added to the portfolio. We're going to just quickly look at what's been going on with the portfolio. So we'll take a look at Apple sitting at 134 and 134.29, and right now for my position, I still have the same position I've had since the last several videos. I am 100 shares. The average cost is 102. I have not done anything with the company. I'm just continuing to hold Apple until I'm probably going to hold these shares forever and wait for Apple to do another stock split, and I'm never going to sell these shares. So total return $3,000 for 30%. And I do believe they report earnings for this week. Let's take a look. Hey guys, can see right here that now that I'm a Gold member, I do get the Morningstar reports, which I think I find them helpful because I'm always looking for a second opinion in the market. But you can easily look at the Morningstar reports just by going online on your desktop or on your computer somewhere. So take it how it is. Some people find it useful, some people don't. I find it useful. Morningstar is a very they have a lot of credibility, and the fair value, they're saying that the fair value for Apple currently is at $98. So that's right around my average cost, and that's the reason why I haven't been adding any shares or so. So Apple does report earnings for this week, so they have a expected EPS of 98 cents. We'll see if they can beat that or not. I do believe that Apple will beat the EPS, but we'll just have to see about that. So that's Apple. I don't have any news about the company, and we're going to go on to Disney. So Disney is sitting at $182. My position, I have 50 shares for average cost of $165, so I'm up 10% with the company. Disney has been selling off. They recently had news in the markets about I think Disney worked out a deal with Sony so they can purchase the Spider-Man movies. So the reason why I have Disney Plus, and like I said, I haven't seen any of the Spider-Man movies, and I was wondering why. And that's the reason why, because Sony had the rights to the Spider-Man movies, so they couldn't really show the Spider-Man movies on Disney Plus. But recently, they worked out a deal to get the Spider-Man movies onto Disney Plus. So that's going to be a huge deal down the line. And I don't really have any other news about Disney. The parks are supposed to reopen, I think, sometime around April 30th or so. Possibly longer than that. I'm not really sure. I have to recheck the articles for that, but they're planning to to open the parks back up. And I did watch WandaVision and Falcon and the Winter Soldier and WandaVision, and they were both spectacular. So that was really good. Let's take a look at the Morningstar report. So they say fair value is at 154. That's slightly above my for my average cost. Well, that's slightly below my average cost. I have an average cost of 165, and they're saying fair value is at 154. So I do believe Disney is a $200 stock, and I think it's just a matter of time once the parks start kicking in And the subscription numbers, Disney Plus subscription numbers, look very good. They look very solid. So I just think it's just a matter of time before this company gets right back up to 200. I think it broke, so it broke 200 not that long ago on March 8th, and then it's been selling off, sort of been trading sideways for the past 2 months or so. So I definitely think Disney will get back up to 200, just a matter of time. So the next company is Berkshire Hathaway at 271. I have 50 shares for average cost of 267. So admittedly, I have not done a very good job of holding the company. I think in the previous video, I mentioned that I wanted to build a solid position around Berkshire Hathaway. I want to build a portfolio around the company because I do think that the company is very undervalued still, but I have not done a very good job at holding the company because I had to move the capital to other companies that I thought were on sale. So I just didn't have the money to put into my portfolio. So I had to sort of shift things around to accommodate that. And I think that's another reason why I bought Robinhood Gold, was because of I can make bigger deposits when the companies go on sale. So that's another reason why I bought Robinhood Gold. And you guys know that Robinhood Gold is only $5. It's $5 every month. So I'm not really worried about the $5. I think that for what Robinhood Gold gives you, it's like the level 2 market data. It gives you like the Morningstar reports. I think that's a good deal for me. The biggest reason why I did it was the bigger deposits. I do like the bigger deposits. I can deposit almost $50,000 instantly and have that cash ready to go. So that's one of the reasons why. But yeah, Berkshire Hathaway, we have not done a good job holding the company. I have an average cost of 267. In the previous video, I had an average cost of 244 or somewhere around that average cost, but a total return of $184. I do think that the intrinsic value for Berkshire Hathaway is around $300 or so, and I think Morningstar agrees with that. Fair value, they're saying that fair value as 293. They think that fair value is 293. So I definitely still believe that the company is undervalued. And according to Robinhood, they're trading at a PE ratio of 15. So that's still massively undervalued for a company like this. And it's really in our portfolio. Berkshire is in our portfolio to give us some defense. The portfolio doesn't have a lot of defensive stocks. So I'm holding on to the company until I can find a use for this money. I don't really like buying Berkshire Hathaway here because, again, their average cost is kind of eye-opening, but I just didn't have any place to put this $13,000 in. I don't think you can ever lose if you just want to roll with Buffett for a while and sort of just let Buffett manage a good portion of your portfolio, because he's pretty much one of the most famous investors that ever lived. Him and Charlie Munger. And I know Todd and Ted are his, they're like the proteges of, I don't even know if I'm saying that word right, but they're like, they're upcoming, and they've done a lot. This company has been on a massive run, 45% for the past year, after the S&P 500 was beating it for the last couple of years. So Berkshire Hathaway is an interesting company, and I do think it'll get to $300 soon. The company that was on our watch list but is no longer on our watch list was AMD. I have a full position, 100 shares for an average cost of $79.49. Let's take a look at the total return. So the total return shows that I'm up $336. We were able to purchase the company at a discount, at a major discount. The company has been down for the past 3 months. 11%. Probably from when I bought it was probably lower than that. Almost 16% on sale. So this company is, in my opinion, this company is a top 3 company for the semiconductor industry, AI and chips. We guys know that the major players in that sector space is NVIDIA, Intel, and then there's like AMD, and they're all 3 of them. I know a lot of people like Micron Technology. I want to take a look where Micron is right now, just right quick. So Micron Technology, I think, is around 85. So there's a lot of competition in this space, but I definitely I definitely think AMD is a top three holding. It's a top three player in this sector, possibly top two. AMD has done a lot of things that I like, and the company was massively on sale. And for the reason why I know the reason why we purchased the company, I purchased the company was because the company has had phenomenal growth these past 5 years. It's over 2,000% for the company. So this is a this is an extremely good buy. Morningstar has a fair value of $101. So this company was definitely a good pickup in my opinion as far as helping the portfolio out, growth rise. So we'll see where the company goes as far as AMD. They do have an earnings report that they have to get through. Expected EPS 44 cents. I know Intel beat expectations, but the guidance was not very good, so Intel sold it off, and we'll see what AMD does. The next company is Skills. This is a massive play, esports play / gaming play for mobile applications, and I have a major position at an average cost of $17.70 for 225 shares, so a market value of $4,000. I am currently up $72 on the company. This is a extremely volatile stock. Take a look at the chart here. It's been massively. There was a brutal sell-off starting from February 5th. Went from $43 all the way down to almost $12. So this company was massively oversold, and we are trying to take advantage of that. That was the whole point of buying into the company, because I do believe that the mobile gaming space is starting to take off. I do believe that I've always been a fan of esports. I've always been a fan of trying to find a stock to invest and to have like a major player in the esports market. I just didn't know what stock that actually was. I know about Electronic Arts, Take-Two Interactive Software, and all those other gaming companies, but I think Skills, if they can, fix their balance sheet, they can fix like the executive issues and whatnot, that this company has massive potential to get back up to all-time highs. It's pretty much oversold at this point. And if you guys been following the company, I do believe that ARC's Kathy Wood invested into this company also. So she bought around, I think her firm bought around 5 million shares not that long ago, I think at an average cost of about $15. And I think even on when the market closed Friday, they bought like an additional 1 million shares or something like that. That's according from what I've read. She's been buying the company. So that is really that is phenomenal to see that a major name like Kathy Wood is buying the company. And other than that, I just don't have much to say about them. I just think that a lot of people are talking about the stock. A lot of people, even the people on the Reddit forums, are talking about the stock. They are talking about there could be a potential short squeeze with the company. And I didn't buy the stock for that reason, for the short squeeze. But if the company does take off like a GameStop, how GameStop did, this will be the catalyst that will push our portfolio to like unbelievable highs, because we have a massive position in the company. So if the company did pull the GameStop and went from $18 all the way to $90 or something like that, I will possibly sell the company. But we are going to have phenomenal gains at this rate with our low average costs, and there is a lot of risk with the company too, because again, the company has been selling off here, and it could go from $17 from my average cost all the way down to like $8, and I will potentially lose a lot of money. So this is by far the biggest the most riskiest investment in the portfolio thus far. But I do believe that the company is just oversold, and I do believe in the mobile gaming space app and esports. That's the play for Skills, and not much to say about them. Other firms are investing into the company, just like Kathy Wood is. So I didn't buy the company just because she did. I know a lot of people like to buy companies. Like, for instance, Buffett might buy something, and then people follow Buffett just because they bought it. That's not the reason why I did. I bought it for the long-term fundamentals. So we'll see we'll see if this was a smart play or not later on down the line. AT&T is sitting at $31.36. I have a position 220 shares at average cost at $29, and I am above $300 with the company. They had a recent earnings report, which was they smashed expectations. The HBO Max subscriptions looked very, very good, and the revenues, and they completely shattered expectations, and it looks like the company is finally turning it around. So they've been working on trying to reduce the debt. They have protected the dividend, and the company is fairly undervalued at this point. My thought process behind buying AT&T was to have the portfolio generate some sort of passive income on the side, because again, I just didn't want Berkshire Hathaway to really be the defense for our portfolio. Since I bought Berkshire Hathaway so high, it could potentially sell off, and we can potentially lose out on a lot of money. Even though Berkshire Hathaway is our largest position, I wanted some dividends. I needed some dividends to help us out. So AT&T is there for that reason. And I saw that the company was trying to turn it around with the new management. And like I said, this earnings report was the catalyst because it was extremely good. So Wall Street rewarded the company when the earnings report happened. And you can see this massive spike up here when that happened. And I don't have much to say about them. I have 220 shares. I will continue to buy AT&T as long as it's below $30. And I'm hoping to get around 500 shares of the company. That's the target for now, but I'm happy with this position, just sitting and holding the company. I might start doing some covered calls with the company. I don't really know if I will. As you guys can see, I already have covered calls in place, sell call. So I don't know if I really want to do that, because I do want to hold on to these shares, but we'll just see what AT&T does for the next couple of weeks. I'm not really sure if I want to do covered calls just yet. The last company in our portfolio is VC Properties, sitting at $30.80. I have 310 shares for an average cost of $29, and we are up $465 with the company. This is a hospitality / gaming REIT, real estate investment trust that I think Wall Street has not been paying attention to, but people have recently caught on that this company is a major player in the space, and I think people are jumping in at this point. 2% for the past week, 15% for the past month, and for the past 3 months, sitting at 16%. So this company is growing. This company has seen some phenomenal growth these past 3 months. It's still fairly undervalued for a P ratio of 17.65, and the retail, the REIT space is extremely good, and they still have a dividend of 4%. So that was another reason why I wanted to buy buy the company, so I can get another major dividend player in the portfolios to hedge against market corrections. And VC Properties does that. VC Properties pays a pretty good dividend and has some pretty good growth, and it's a pretty good company. I purchased the company because I saw that the company did not cut its dividend through the coronavirus crisis. A lot of companies did, but this company, VC Properties, did not. And that really surprised me. That surprised me enough to throw some money in it, because that tells me that the management knows what they're doing. The management team knows what they're doing. And they have a capable management team to really support the stock. So we put some money into VC Properties, and we're seeing a ton of growth along with the dividends. And again, those dividends will help us out. Helps the portfolio generate some passive income on the side. And other than that, I don't have much to say about VC Properties. So, I believe that's it for all the companies in our portfolio currently. I said that AMD was on our watch list, but I bought shares of the company on Friday when it was at like $79. I do believe that AMD was probably one of the best pickups that we've done in a while. And let me take a look at the year chart. So the portfolio reached about $69,000 before selling off, and a lot of that is my fault because I was buying companies like I was getting caught up into the hype of Bitcoin and Dogecoin and all that stuff, and I started taking losses. The portfolio was started to sell off. I think there was like another tech correction hit, so my Apple's a big is a big allocation to my portfolio. Portfolio diversity is over 20%, but the portfolio reached 69,000 and then it sold off. It went all the way down to 61,000. So yeah, that's what happened with the portfolio. So we're trying to make up those losses, and I think we can do that with the portfolio structure that we have right now. The last thing that I want to talk about is the last stock that was on our watch list. That's Rocket Companies. So it's sitting at $22.12. I do plan on purchasing the company on Monday because I do think that company is massively undervalued. It's not massively undervalued, but I think that the company has potential to break out at this rate. This is a mortgage slash home ownership company. And since the portfolio does not have a financial stock, I think Berkshire kind of makes up for that because Berkshire is just heavy on banks. But I also wanted to buy like a mortgage company or like a home ownership company, and Rocket Companies fits the bill on that. I just have a good feeling about this company. They have a very good a capable management team, and I do believe that the company can get back up to its all-time highs. This was only fueled by the Wall Street Bets Reddit group because a lot of people saw potential. They saw potential that Rocket Companies could do a short squeeze, and this stock just went to the moon. But then it's been selling off, and it's sort of been trading sideways for like the last 2 months or so. So I want to buy the company because it has some good fundamentals. And I'll probably buy a starter position of 50 shares. So that's the plan with the portfolio moving forward. I'm going to buy this company, and if I can buy it even at below $22, that would be just perfect for me because I do want to invest some money. I do want to invest this $800 into the company. So that's the plan as far as like getting Rocket Companies in the portfolio. But let me know what you guys think about portfolio, guys. I'm at $65,751, and let's take a look at the M1 Finance portfolio because I have not done a review for the M1 Finance portfolio. So M1 Finance, I only have one stock in the Roth IRA. This is the only Roth that I have, as far as I have a Roth on M1 Finance, and it looks like it's doing very, very well. Reality income, $888 for a percentage return of 520%. So this is really, really good. This is pretty much on autopilot. I have not done anything with the portfolio. I think I did turn off the drip because right now the price is just too extreme. It's at $69. I think that's realty income has returned from pre-COVID levels, but this company has been just rocking it. We haven't done anything with the portfolio. I've just been sitting here. It's been compounding dividends, and I won't do anything with it. This was the plan from 2018 or 2021, and we were seeing some really good returns. So I'm just not going to do anything. I'm going to let the computers manage this and see where it goes. But that's both my Robinhood portfolio and M1 Finance portfolio. I hope everyone has a great trading week, and I'll talk to you guys next time.